Hey everybody, welcome into the Mining Stock Daily Friday morning long form episode here on the podcast. I'm your host, Trevor Hall, here with you for improved Mining Stock Daily. Yes, we are pushing more into video, and this will be, I believe, our third long form episode that we'll be publishing the video along with the podcast, where you typically do get the MSD publications. I have an interesting a long form discussion with you. In fact, I wasn't initially planning on this to be the long form of the week. Originally, it was supposed to be a corporate update with Bunker Hill and their executive chairman, Mr. Richard Williams. Richard and I actually have familiarity with one another back before even I was doing the podcast, back before his Bunker Hill days, and he was COO of Barrick at the time. And so we kind of talk about that and lay a little bit of a foundation later in the conversation about his transition into the junior developer space, coming from an executive role of a major gold producer. So honestly, I took up the entire hour, and I'm glad I did, because it's a conversation that is heartfelt and important. And I think a lot of people and a lot of management teams in junior mining right now maybe need to hear. It's been a tough summer. It's been a tough year and a half, I guess you could say, for the most part. But we got to keep on working, don't we? It's important. Not everything is the markets, but it is just a little bit of a thorn in our side, I might say. So it's an important conversation. I'm glad I could air it. Special thank you to Western Copper and Gold, Arizona Sonoran Copper, and also Fireweed Metals, and we heard from just the other day, for their continued sponsorship of the podcast. If you wouldn't mind, please hit that like, subscribe, leave a review of the podcast wherever you're listening, either on the podcast medium or even on YouTube now. Really, really appreciate for all that constructive feedback. All right, let's jump into that conversation with Richard Williams of Bunker Hill. Have yourself a great weekend. We'll talk to you soon. Hey everybody, welcome back in to Mining Stock Daily, continuing a very, very busy week of corporate updates. And here's an important one that's a couple of weeks overdue here. Big news out of the historic Bunker Hill mine, which is actually owned and operated and hopefully back into development stage here with Bunker Hill Mining. They do trade on the CSE with BNKR, and happy to welcome in an old friend and acquaintance, Executive Chairman, Mr. Richard Williams from the company. Richard, welcome to the podcast.
Thank you very much, Trevor. It's very good to be here and have the opportunity to discuss long-awaited good news.
Yeah, always a pleasure to chat with you. I don't think you've been on the podcast before, but before we kind of get in the nitty-gritty of this, you and I actually... Funny story, you and I actually met when you were with Barrick. And right. A funny story, you guys did an event in Denver, a hackathon. That's and right. One of my jobs at helping out with this hackathon was getting you from the event of the hackathon to the networking event. Yeah. And I felt really bad about it because we had to use my own car. And it was a mess. I felt really bad about that.
You shouldn't do. It was very, very good of you to do it, and I remember that it went well, and the car drew no attention at all. It was a very successful and interesting event. I think I don't want to get too distracted by it, but I think of the many things that I remember from Barrick was once you unleashed the energy of a whole bunch of clever people, you just were constantly surprised by both good ideas and progress. And that sort of hackathon, that not unique to Barrick, most companies are looking to reach out for new ideas and so on. It was just a great program, and great to be part of. I enjoyed that a lot.
Well, let's talk about taking some creativity and maybe redesigning something and turn that angle towards the historic Bunker Hill mine here. Let's get down to business. You're back in finance here. Now, this is an ongoing kind of sit and wait type of news event here. A lot of people expected this to come quite sooner than it did, but you finally did get financing from Sprott, $67 million term sheet, which is increased Sprott Streaming's commitment for that mine restart. We can go back to the news release that was published and break it down, by reading it. But Richard, let's kind of get that general sense from your mouth. What is the terms of this deal here now?
Yeah, sure. If you don't mind, I'll also just remind everybody of the sequence of events that led us to this point.
Yeah, please do.
Firstly, the way Bunker, in addition to its magnificent shareholders, we have two really strategic partners in Bunker. One of which is Sprott Streaming and Resources, who've put this deal on the table, and the other of which is Teck Metals, who will be taking our concentrate and refining it at the Trail smelter, a couple hundred kilometers away from the mine. And Sprott, as our primary finance partner, had put on the table some time ago a stream, multi-metal stream, for $37 million, and provided us $15 million, which actually $21 million of convertible debentures to get us to the point at which we could conclude the total project finance. And that required a couple of things, one of which was to advance our engineering and associated studies from the PEA level, which is where we first brought Sprott in on, to PFS level and beyond, for lots of obvious reasons, to reduce the risk in the project, and so on and so forth. And then secondly, was to bring in some equity into the company, which would, complete the finance. In other words, the Sprott package wasn't, as it was originally designed, wasn't going to get us to the finishing line. And you remember towards the end of last year, after pre-marketing this, we went out with a prospectus offering in around about November. Again, the specific dates I'd have to look up. And although we got the prospectus cleared in Canada very quickly, the SEC kept on coming back in a very slow way with a series of comments that essentially took so long to respond to that our financials went out of date. And so we had to go from a prospectus offering, which was going to issue new investors free trading stock, into a private placement in a crisis mode. I'm have to say, for whoever is unfortunate enough to do this, I wouldn't wish it on anybody. It certainly wasn't what we wanted. It certainly wasn't what all our supporters wanted, but we had to roll with that. And having rolled with that, we then found ourselves a fair amount of equity, around $8.3 million, which obviously is not free trading stock. And we had to issue this equity in a special warrant deal at 12 cents with a 15-cent warrant. And, that was not sufficient to get us to the finishing line. So in those circumstances, you're going back, and as part of that 8.3, Teck just went as far as they could go with respect to not wanting to hold more than 10%, and were just there at every step of the way. And I can't thank them enough and praise them enough for the support they gave. And into those circumstances, we ended up in this position whereby, discussing with our other strategic partner, represented by Caroline Donnelly of Sprott Streaming and Resources, we said, well, how are we now going to get to the finishing line? We've got ourselves a very robust project that we've had to put on ice because to preserve cash. Will you, and we spoke to a number of other parties, offtake parties, and you've seen press releases about that, and we had offers from them and so on and so forth. Will you put on the table a financing package that can get us moving again? And although it's likely to be expensive, could we have a look at firstly taking account of the fact that our engineering studies have advanced beyond PEA now to PFS level, and it's much more robust a project than it was when you first got involved. And secondly, that we'd like to ensure that we've got the ability to refinance this, any expensive part of it, as we go forward, because both Sprott and ourselves have to worry about credit risk, or they have to worry about credit risk. We have to worry about cash management, cash flow generation in a volatile metals market. And what she put on the table, and again, I'm using Caroline as the named party in this partnership, and she's been fantastic, is three things really. Firstly, was she extended the stream from $37 million to $46 million without any change to the economic terms. And she did that to take account of the fact that we'd advanced the project from PEA to PFS level. That's very good of her. Secondly, she backfilled the money required to get us to the finishing line, $21 million, with a new debt facility, which we can draw on if necessary, but we could replace with a lower cost of capital if we could find it. And we're not going to need to draw on that until later in the project, sometime next year. And then thirdly, because we have some convertible debentures due to her, $21 million, and those things we don't want to have come at us in the early stage of production, she agreed to push those out until a conversion date out till March the 31st, 2026. So all three of those things saw her operating as a partner in helping us get out of the difficult spot that we all collectively got into in the start of the year. Now, anyone on the call will go, well, gee, was there ways to avoid these difficult spots? When I said, well, if we knew that the SEC was going to take a very slow approach to our prospectus, we wouldn't have done a prospectus offering. We'd done a private placement. We could have gone faster. But we were very interested post-marketing to get ourselves in a position where we could offer free trading paper, and that's essentially why we did that. But I'd sort of open it over to you for questions. So that gives us the sort of the position as we see it at the moment.
Okay, a couple of things I wrote down here before this financing, this new and improved financing was announced.
Yeah.
You mentioned that Bunker Hill Mine was really in cash preserving mode. It was on ice. Tell me about that. I mean, how much work was being done? How many people did you continue to keep on the payroll? And now I know after visiting the mine there, God, what was it, last fall?
Yep.
You were really active in pushing forward about getting a lot of the development, deconstruction, reconstruction, places where you wanted the infrastructure to be placed to get that moving. So what has happened in the last year is when you mentioned cash preserving mode?
We didn't get into cash preserving mode until we knew that the prospectus offering wasn't going to be executed. So if you think we went into the private placement around about March time, late February, early March, I've got to think sometime around about just after Valentine's Day, everything was advancing on track until that point. So we went into cash preservation mode quite late because we needed to make sure that equity raise worked and we didn't have too much of an overhang on cash management. So if you remember, what we said to you last fall, which we've delivered on, was we wanted to ensure that the underground development for the first 3 years worth of mining in particular had been mainly achieved. And really what that meant was that ramp that was connecting the upper parts of the mine. So the first 3 years of mining above the water table, we could have access to, which we concluded. Secondly, and lots of press release and videos came out of this. We dismantled the old mill building, started dismantling the foundations, getting everything ready for the construction once its engineering had been finally concluded of the mill building and associated waste facilities and so on and so forth. And that was all advancing absolutely as it should have been until we felt in that prospectus offering that we were getting into pretty tight water. So we put everything on ice, and as a result of that pushed out a number of things. It pushed out some procurement decisions, some conclusions of engineering prior to those procurement decisions, And that's why you see us moving from a start date, which was going to be in Q4 of this year, into a start date where it's really the second half of next year. Now, depending on how aggressive you are, and we have aggressive optimization plans, we'd be starting in the first half, so Q3. But if you're taking a more conservative approach, and this is how we speak to the market, we'll really be, producing with everything firing as it should be in Q4 of next year. And the reason for that essentially, significant delay was because we had to put on hold some engineering and procurement decisions that, frankly, we couldn't have afforded to have made at the early part of the year, given all of the uncertainty. Mm-hmm. But anyway, I mean, that's where we are. What's really interesting in it as we go along is the total capital numbers in terms of the money required before we get into production, with careful scheduling and so on and so forth, haven't moved. And that allows us to go to Caroline with all the cost to complete process that has to be done before money is released, all of which we've done, and basically say, look, this is our robust construction plan. And we see upside in there too. We see there are areas, as I mentioned, speaking aggressively or looking to the upside or looking to optimization, whereby we produced a base case plan, Trevor, which we know we can deliver on. But actually, we think we can improve significantly once we get moving again, which in effect we are now.
Yeah, I want to go back in early March. You released Bunker Hill released a news release reaffirming the capital cost and budget estimates for the restart of the mine. Mm-hmm. At that moment, it was then that $37 million, the stream from Sprott, private resource streaming and royalty. Mm-hmm. That obviously has been increased to, I think, an extra 11 million. Is that what it is, to 46?
9 million to 46.
Yeah. Okay. So, I mean, what has changed? It can, if you can make it clear for me why you needed that extra 9 million for the restart in such a short matter of time.
It's not just the extra 9 million. We went to the market, to the offtake market, and we were going to finance go back to, let's pick a date, Valentine's Day, go back to February the 14th. We were going to finance this mine with a blend of three sources of capital, one of which was going to be the spot stream, second of which was going to be an offtake finance deal, and you'll see we also announced that we had a series of term sheets for that, and the third was going to be whatever equity was required to fill the gap. We had a review of the offtake terms, the cost of them, and so on and so forth. And as part of our discussions with Caroline, said, well, look, we could take this, but it's expensive and it's risky. And we might just get across the finishing line and go, gee, we haven't got much juice left in cash flow once we get operating. Things have got to move at a very... And so we actually had those type of discussions where essentially we ended up with a capital solution that was better than we were previously going to go for. And it's not that the off-takers were trying to, cut off our arms and our legs. It's just the at market prices relative to what we could get. We basically sought to get a better alternative. And in the end, we got this alternative, which is why, although there are elements of it that are expensive that we'd like to refinance downstream, we feel we got a better deal. Okay. So it wasn't the nature of the project changed. We were basically just engaging with the capital markets on multiple different levels simultaneously to try and get our best financing deal at a time when, as you and the other people you'll be interviewing know, that the market is very, very tight for capital.
Oh, yes. As a common theme here as of lately.
I mean, as of a long time.
Have you ever seen? Have you seen it this tight before in all your years working in this sector?
Well, no. I mean, I was talking to someone today about it, actually, a sort of think tank out of UK. Is I came into the mining sector in 2008 when you had the biggest contraction in capital in the mining sector in modern history. That was caused by the global financial crisis.
where essentially you ended up with a 50% reduction in the availability of debt capital to the mining industry, because mining was judged to be a high-risk asset that banks had to reduce, courtesy of the global financial crisis. And then since then, what you've had is much more discerning capital, the ESG requirements, all of which are fine, but nonetheless, constrain some capital. And then thirdly, you've had all these alternative investments that people are more interested in, would previously put money into mining, and they've had a go at those, be it the cannabis stocks, be it crypto, be it tech, be it whatever. We've always got to compete with capital in the equity markets, and you need the debt markets with other asset classes. And so I'd say, capital's been tightening throughout the whole time I've been in the industry. But what's been interesting for me is I've moved from being in a large cap situation as chief operating officer of Barrick into a single assets developer with a small market cap, coming out of a super fund site with a toxic marketing and a toxic management history and a toxic, legacy, which has not been easy. And we're also in metal, although over this mine's life, it's going to be, 50% silver, where we're starting off, silver's in the minority and zinc is in the majority. And as much as I like zinc, a lot of the market isn't particularly excited about zinc. So we really took on something that had we took on a hill that was exceedingly steep and icy at night without night vision goggles. That's how I describe this particular climb that we've done. So the only way you get up that type of steep climb, which is what mining industry needs to do in so many areas, so many companies need to do this, is locking in really good strategic partners. So when I talk about Bunker Hill, I can be, as you know, very enthusiastic about the asset, the team, and the plan. All of those things you'd expect me to talk about. I can also be very enthusiastic long-term about the metals. But I could not achieve anything if it wasn't for the partnerships we've been building outside the company. And that is Teck, that is Sprott, that's the US EPA, that's the Idaho Department of Environmental Quality, and other associated groups. And it's been that investment in partnerships that have really got us out of the jam that we got ourselves into at the end of last year. And it's those partnerships we don't just see as being something that we wish to leverage for the restart of Bunker Hill, which will be to their benefits. Teck will make nice money. Sprott will make a hell of a lot of money. Our shareholders will benefit from both of their investments. The EPA will get the money owed to them, and the IDEQ will have a model mine and a super fund site that just shows it can be done. Lots of people will benefit from this. Community will have 250 jobs, an area that is just fantastic. You visited it. We'll have a whole bunch of lively economic activity injected into an area that has long deserved it. All of that is positive. But those partnerships, we want to carry us on beyond Bunker. We came to Bunker to get Bunker restarted, to have it as a cornerstone asset in a portfolio company. And so all of those partners that I spend a lot of time talking to and engage with come in because of that strategy, not just Bunker. I'm sort of mining executive 101 this, but it nonetheless is, I just want to sort of say that it's investment in those partnerships that has got us back on track again. The asset deserves it. The people deserve it. And I'm delighted that we're where we are.
Richard, I wasn't necessarily completely prepared to go down this route and kind of talk to you about this transition from a major role in a major producer to a big role in one smaller asset developer. I want to go down that, but
sure.
First thing, but before I get there, I do want to ask you one last thing. You're in this phase here, this development construction phase officially now. You're financed, you're ready to go. You've put a timeline out there when first production could begin, so that's important. However, and I remember talking to you about this on site, is like we've seen similar projects such as Bunker Hill come into the same type of development time frame and have a very, very difficult time getting things commercially sound.
Totally.
So you're now approaching potentially another set of challenges here. And how prepared are you to face a new round of challenges now that you've kind of hurdled over the latest?
Well, we haven't been, thank you. And you're 100% right. We had a couple of overhangs on our stock, to use that phrase. One of which is, are we fully financed? Well, we're through that. And secondly is, can we deliver on the plan, on time, on budget? That's a good overhang to have. And that's a challenge for us. How do we look at this? And with all humility, because, projects are loaded with uncertainty and risk. We haven't been sitting still over the last few months. So we've got ourselves a project where each of the component parts are exceedingly well understood in terms of what needs to be done, what needs to be bought, what needs to be fitted, who needs to do what, and so on. Every project would say that. But if you look at the component parts of what Bunker Hill has to do, in terms of the early part of mining, just say the first 3 years of mining, one of the questions that Sprott asked us, and you can imagine in the cost to complete, is how certain are you of the reserves? How well drilled are they? Is your development plan robust? What are the cost estimates you've got in there, and so on and so forth for the underground mining? Well, needless to say, a lot of work has gone into this. We've inherited an awful lot of data from the past, and you went down there, and we've actually done the major capital investment already. And that met our cost estimates completely with the contractor that we're going to use for mining. Now, the moment we get started, that underground is you're going to see a couple of things happen to it. 3 or 4 to be accurate. One of which is that we're going to expand the size of that portal that you drove in, which you remember was the vehicles fit, but they're a little bit tight. So we've got it in the budget, not a lot of money, but you're going to see that happen. Secondly, you're going to see the underground all connected to the power grid. So we get 6.5 cents per kilowatt hour power, a green power off the grid, rather than diesel generators for our drilling and our work and so on and so forth. That's going to happen. Thirdly, you're going to see us do all the type of confirmatory definition drilling that you'd expect, so that we're 100% ready for mining, where all the risks have been taken out of it as much as any miner can do. And then finally, we're going to invest it in the ventilation. So very quickly this year, I hesitate to put a time on it, but this year, because I don't have it on the top of my head, you're gonna see the underground ready for mining. Now, what's interesting about that, Trevor, is that will provide us an option once the underground is ready for mining. If anybody wants to buy some of our ore and put it through their mill, happens to be local, to fill up a gap that they've got, and if it suits the metallurgy suits and the metal suits, the concentrate suits, and it can be sold, there's an opportunity there. Needless to say, we're discussing those things, but we can't really put a pin on it and can't news release it until there's a contract. So all that work's going on. So on the mining side, I'm pretty confident. I mean, this is a exceedingly well understood part of the mine that we've got access to today, that we've built the infrastructure to support today. Second thing is on the metallurgy, the processing side of it. As you know, one of the things that causes problems is delay in the procurement for critical parts. Well, the critical largest capital expense that we have is our processing facility that we bought off Teck and moved it from Pend Oreille in Washington State to the site. And then we conducted all the MET testing required to sort of confirm the most efficient operation. And it was decided by our head processing engineer, who is also going to be our process manager, but is the project manager for this part of it, Mike Eisler, who formerly ran Barrick Nevada's refractory processing. I think you might have met him, exceedingly impressive on-site individual, along with support, to actually upgun the front end of the circuit, the comminution grinding circuit. So what we brought in is an upgun ball mill, which will replace the ones we got from Pend Oreille, because the rock hardness in Bunker Hill is significantly harder than what you get over in Washington State. But what that's also done is given us increased capacity, so that the goes from 1,800 tons a day to 2,500 tons a day nameplate capacity. And we're doing work now, but it depends on a change to the mining schedule and so on and so forth, to see how quickly we can get not to 1,800 tons a day, but 2,500 tons a day, and what that does for economics. So in terms of that part of the project related to the construction of the processing plant, I'm pretty sure, and I can't see major challenges to this, that we will have by the end of this year all the mill building up and running with the major components in there as we go into the Christmas period, where essentially it's sort of piping and electrics as we go into the new year. And the other part of the plan, and there are many parts that we're focused in on, is waste management. You'll remember that a considerable portion of our waste, that which comes out the back end of the processing plant, is going to be going back underground. Firstly, as part of the paste backfill, and then secondly, going into the voids that we've identified to ensure that we don't have to do much surface deposition of waste. But concurrently with that, we're also getting ready to have facilities for dry stack tailings on our land in and around the mine site, so that we end up with 3 places to put our waste: underground in the voids, 2 paste, and 3 dry stack tailing. So we aren't ever tailings constrained, if we call it that, or waste constrained in the development of the mine on a go forward basis. And then the other parts to a project that you've really got to pay attention to, and there's all those sub parts like procurement and so on and so forth. We've been working on this with our EPCM contractor for some time, but that's all the coordination and procurement part of it. But the other bit, which is so critical, is making sure that the human talent, the skills that we need to have on board are in place, and the contractors that we're going to be using, mining or others, are also in place and at the right cost. Well, that final one on the mining side, CMC, who you met some of the guys when you came down, are doing work for us now and have been doing work for us ever since I've been on the site, and are ready and were ready before to mobilize and scale up to meet the needs of the project as we go forward. So that's sort of give you people listening to the call a feel for the key components of all of this that we've been working on, and that the team that we've put in here. Yes, we have Strike and Bar Engineering, and then Strike working the EPCM part in support of our general manager, who's effectively our project manager, Tom Francis, who's on site. And that's the final other bit of risk management I remember from one's time at Barrick and elsewhere, is the guy running the mine is also the guy running the project. So we don't have a handoff between project management and general manager. It just flows all the way through. So for people listening, I say it with all humility, projects do have risk. There are issues that you may not have anticipated that comes up, but we've got some significant advantages here at Bunker in terms of certainty in big areas. That means that some of the little areas that I'm sure will come and surprise us on a weekly or monthly basis are things that we can deal with because we've got the big areas already covered off. But we take this very seriously.
It's promising. And I'm trying to think just off the top of your head, because I certainly can't think of one. Is there another late stage mine development story in the United States right now that's financed, ready to go, being built?
I'm not sure. Again, it's a good question. I probably should, for marketing purposes, understand where we sit relative to other projects. Fully permitted.
Perhaps there is. Perhaps there is. I just can't.
Finance, good to go. I can't see it because we came to Bunker. One of the reasons we came to Bunker is that the critical permits were in place and we could get moving. Other projects don't have that. So we do have those advantages, and we're making the most of them.
Yeah, Richard, I do want to, if we can get maybe a little, stepping away from the development of the mine, and I'd like to get a couple, personal questions then for you.
Sure.
My first, and I said before in the beginning of this conversation, like my first memory of you was as COO of Barrick, and you come in and you had people, willing to do whatever you asked of them, right? I mean, it was a big time position, obviously, in a massive organization, a massive company doing big work, but it also came with, I'm assuming large levels of bureaucracy, administration work, and a lot of stress. And I've always wanted to ask you about how you have adjusted from one of the largest, if not the largest, gold mining businesses in the world to the being as nimble and flexible as one needs to be in a single asset, small junior explorer / developer. How has that transition affected you? How have you transitioned, and what have you noticed about yourself? I mean, through this.
Well, there's a number of themes to that question, and I thank you for it. But firstly, the Barrick story is an important one because it does lead to why one's at Bunker and how things are operating at Bunker. Is that when John Thornton took over as chair from Peter, I came on board as his chief of staff and then subsequently became chief operating officer. I executed on his vision, really, and his vision was to remove any layer of bureaucracy that sat between the head office, who are responsible for setting strategy and allocating capital, and the mine site. So we removed all the regions. And so there were no North American office, no South American office, no Australian office. And all those mine sites, and we'll just simplify it for numbers terms, 20 of them reported directly into me. And then I then reported to Kelvin Dushnisky, and Kelvin reported to John, although it was a more flat structure at the executive level. And so suddenly we ended up with all of those operations, 20 of them. And most people said, well, that's impossible to manage. The span of responsibility is too big. It can be, unless you put mechanisms in place. And the two critical things that one did was we ended up with a weekly business plan review, where every week for an hour and a half, all of the operations, with everybody listening, every operation listening to everybody else, along with the whole company, listen to how that week had gone, what it meant for the annual plan, and what it meant for the 5 and 10 years plans. But they only had 3 minutes to provide that assessment. So imagine a big complicated operation like Cortez, underground and open pit. It's only got 3 minutes to say how the week went. Is it good or bad for the year, good or bad for 5, 10 years, and how are risks changing? It takes quite a lot of discipline and practice to be able to issue that type of information in ways that work, provide a verbal dashboard. And so we do that every week, and everybody would listen 52 weeks of the year, and did it for three and a bit years or 4 years. And we never missed a single quarterly target, and all of our targets were stretch. And we had many, many crises that turned up, Veladero, Acacia, whatever it might have been. The second thing one did is one reviewed all of the leadership competencies of everybody on the mine sites at a senior level. And we did a lot of work to ensure we had the right people in the right place. There are many good people who just got tired or weren't up for the challenge because we had to do a lot of work to change things. And that's perfectly all right. Not everybody's up for a change mission. And we made sure that the right people were, and Sam Ash was one of them for the Lumwana copper mine. And then one ran a truly decentralized operation where they were responsible for their businesses, and we were responsible for essentially setting strategy and allocating capital, which in most cases is approving their business plans. And then in addition to that, we then ran a monthly optimization workshop, which lasted 2 days, again, with everybody listening into it, that ensured that we had technical review of all the business improvement initiatives across the company that we were working. And over that period, we doubled Barrick's operating margin while gold price was flat. And we did have things like inflation. We did have things like global disruption to supply chains, not to the extent that COVID caused, but we did. we also had, governments changing the tax rates, and we had community dramas. We had all these things. So over that time, the team that one put together in the operations, in particular, doubled the company's operating margin. Now, how many emails did I get a week or a day? Maximum 3 or 4. I didn't run the company by email. I didn't run the company by telephone call. I spent 50% of the time on the mine site. And when there was an issue that needed to be raised, it was raised at that weekly meeting. And then we then did a deep dive with the right experts to solve the problem. And so if you imagine that how you characterize large companies with bureaucracies and so on, it's a fair characterization. When you're running a big organization, you do need to put systems and processes in that, if run badly, can be called negatively bureaucracy. But we removed that. And I found actually what was quite remarkable, once you got the right people on the ground, energized and motivated to deliver change, which requires them to take risk, which requires them to put more effort in. Once you've got them focused on that, and you can stand alongside them, so if things go wrong, you're not sacking them, you're saying, okay, well, that didn't work, how do we try something better? Mm-hmm. They delivered miracles. So I always say, the Barrick story when I was there, in a tactical sense, had nothing to do with me. It was all to do with the guys on the mine site being motivated and picking up and changing performance. And so you sit and think, okay, what did I do when I left Barrick and I did the Tanzanian job and then came to here? We operate the same way. We have a weekly BPR where we review everything that's critical to the success of our project and company. Obviously, when we're in a crisis, it's not weekly, it's every few hours, because we've only got a single asset to manage. And the capital market story I told you about was pretty sporty. So we had to get our way through that. But we run, disciplined process where, for me, what I'm really interested in is, have I got really good quality people who really understand what they need to do, who feel empowered to make decisions without constant reference to other people, unless it's to get advice. Mm-hmm. And to take ownership and drive it forward. Now, we're just a small group of people right now, and we all know each other exceedingly well, but that's a critical part of the company culture that we want to develop. So I'd say there's consistency between my experience at Barrick and here. The difference has been, is we have that junior mining company development is thin ice skating. The ice you're on is as thin as you like, and when you're about to go through it, you haven't got any backup.
It's pretty damn thin right now.
So that's why I go back to that issue of partnerships. My backup is partnerships. My backup was Sprott. My backup is Teck. My backup's the EPA. When things go wrong, I want, if they go wrong, I want my partners to understand that in good faith, we're doing everything we can, and now's the time to step in and help. And so I'd say that actually there's some consistency between the two. Because of, frankly, how not just me, but I'll speak to the team, but certainly how I like to run things. I don't want to be in a large organization. I should not be making decisions on how to adjust a mine plan.
Well, have you had to maybe step out of your own comfort zone and recognize that going into Bunker Hill in the last couple of years?
Yeah. I mean, well, we actively seek to be outside our comfort zone. Otherwise, we wouldn't take on things like Bunker. If you want to be in your comfort zone, Bunker is not for you. But you see, that's where the opportunities lie. And again, I don't say it with any sense of sort of false heroism or whatever, because essentially, we look at a lot of heavily discounted assets. And you and I probably spoke about a few over a few beers when you were down visiting us. Mm-hmm. Is what we look for is an asset that is distressed, but we believe we can solve the source of distress. And so that in that phrase, solving the source of distress, it requires an estimate, a calculation, and a belief. It isn't certain. This isn't an engineering exercise. You're not going there and saying, I've got unlimited resources and I can solve this problem. You're depending upon the views of people that you trust and the experience that they bring to the party to say, actually, we think we can turn this round. And that's only half the story, not even that. the rest of it is two more important things. Secondly is raising the money and the support for the distressed turnaround. And then thirdly, which is by far the largest thing, which is what you've been quite rightly focused on, is, okay, I get the plan, I get you've got the money, all of life is execution. Can you bloody well do it now? So in all three of those areas, coming up with a plan, raising the money, and now in the business of execution, taking on something difficult does push you outside your comfort zone. So you have to be happy with that. And I always say to anybody who wants to get into the mining industry, this is not a place, if you seek comfort, that you should go and find something else to do. The mining is about taking calculated risk, and when those risks come to visit you, being exceedingly quick to solve the problems that are in front of you, and be honest about it. Don't hide from them, and just drive it forward. And so I thank you for the question, because I've enjoyed a lot about my experience in the mining industry, be it in a large company, be it in this company. But if you sit and think at the end of this, kind of this time next year or a little bit later, we've got 250 people working on that mine, in a mine that no one felt could be restarted and be profitable, and all being well, which is what we're working towards. You've got that up and running. I mean, that'd just be a hell of a thing to do, regardless of how much money it's going to make for all of our stakeholders and so on and so forth, which is true. It's just going to be a great thing to have done. And everybody who stuck with this program through the hard times, we'd sit and talk about exactly that. So, okay, it's a bit tough right now, but just imagine what it's going to feel like to walk through that yard and watch 250 people flowing through Kellogg into the mine, doing the work, coming out in a site that, people had not forgotten about, but didn't think was possible. I mean, what a thing to do. And so that's how we get through the tough times, because we can see where we're going, and everybody's bought into that.
You have no idea how much I appreciate that optimism right now. It's bleak. It's a real bleak market out there. And you talked about looking at distressed assets. There's a lot of distressed companies right here.
I know.
And you've lived this. You and Sam and the entire team at Bunker Hill have lived this for a little while. This really challenging time. And I just think back, okay, when things are hard, what do you want? Let's say you're down really big in your portfolio for a company, but it almost seems like you got two types of companies in this hard time. You have a company that's going to stay very silent, just try to do everything they can do just to keep the equity open for trading and the doors open. Or you have the company out there, it's like, and we may only have $500,000, maybe $1.5 million in the bank, but damn it, we got to do something, because even though we're not going to be able to go do any sort of drill program, we got to preserve the cash. But they're going to be out there doing something on the ground, getting their own hands dirty, doing something that just shows we're going to make it through this. And this has been my last question for you, Richard. I mean, maybe this is more asking you for advice to the rest of management and junior mining out there that are facing these issues. It seems like you have two issues. Do nothing to keep the doors open. Do something just to keep adding a little bit of value to your equity, even if it's a minuscule amount at the time. How do you approach that?
Well, and then you have a third choice too, is recognize your asset may be best worked with others. I look at deals like teaming up. Access to capital is tough anyway, but when there are so many assets chasing too few capital, that the consolidation is a logical choice. And what that needs to come to people, that realization needs to come to people too, because there is this sort of feeling with everybody, I guess. And again, believe me, during these hard times, we spoke to all sorts of people about, hey, look, if we can't get out of this jam, can we team up? Can we team up? Because our job as management is to
preserve the company and thereby preserve shareholder and then create shareholder value. And if that means we have to do a deal, fold it into somebody else, it's not ideally what we wanted to do, but if that's better than nothing, then we need to honestly look at that. And that may mean that we have to change what we're doing as individuals, but our responsibility is to those who put money into the company, which may include us, which in Bunker certainly includes us. And we've got to look at how we do that. So I'd say that each circumstance is different, and the hardest thing to do is to, well, forgive me, life becomes a lot harder if you don't engage with everybody on the team and engage with all your partners as early as possible to say, look, we're in really difficult water now. We've all got to look very creatively and seriously about what we do to get out of here. And just sitting still and letting it wither is the worst of many options. We've got to look at other options. So I don't have any magical advice for anybody, but having got through this last few months, which has been really tough for the guys, what I'd say is that the level of our communication and our engagement, the intensity of it, increased significantly, as you'd expect. You all got to look after each other, and you're trying to solve a problem. You're trying to say, we've got that vision. How the heck do we get from here to there? What can we do? And anyway, we got, as you've heard, and thank you for commenting on the optimism. We've got a lot of belief in this project, and we're all in. And I've got a lot of faith in the team and what they're doing, while I'm talking to you right now. So, yeah.
Well, I was originally thinking this was going to be a 20-minute conversation. We more than doubled that. So I better be grateful for the extended time you've given me and the listeners. Richard, I look forward to that next beer up in Kellogg with you. I think it's going to be a great time. Best of luck. Congratulations on this financing. Job well done to you and everybody else. And let's talk again soon.
Thank you, Trevor, and thank you for all you do. Without you and people like you putting the word out there, we're just shouting in the dark. So I really appreciate it. Thanks for having me on.
Yeah, you're welcome. All right, that's your update from Bunker Hill, everybody, and that's actually a wrap here this week. We'll be back Monday morning with the morning briefing. Have a great weekend. Be well.